Your operations are the heartbeat to your business. I created this podcast to help you balance your childlike innovation with parent-like efficiency. Welcome to Daily Ops Boost. Yo, what's up, team? We are back, baby, and we're talking profit first today. Now, let me just preface this episode for a quick second here. This is not financial advice. You should not listen to anything that I say right here. And this is just stuff that I've done internally in my businesses to have a very effective financial system. Okay. Now, with that being said, I'm going to say it one more time. This is not financial advice. You shouldn't listen to any of this. You should probably just turn off the episode right now. Okay. This is not something that I am telling you guys to do. This is just what I do. Do with this information as you please and as you wish. With that said, let's just jump into it. Okay. So profit first. Let's talk about it for a second. Mike Michalowicz, one of my favorite authors. If you guys aren't familiar with Mike Michalowicz, get familiar because he's great. 10 out of 10. One of my favorite guys to read. Also has incredible audiobooks. And some of you are watching on video right now, but some of you are just listening and you're like, why is he dragging this on? It's because I'm trying to bring up the book to show you. So this is Profit First here. If you're listening in, you just got to use your imagination. It's a white book. It says Profit First on the front. Yeah, and that's pretty much it. Okay, but it's a great book. It's one of my favorite ones, and it really taught me the methodology behind finance and a financial management system that is pretty much based on principles that business should prioritize profit from each sale before considering any operating expenses at all. And so that's kind of what I want to break down for you guys today is that system. This is not my system. This is Mike's system, and I'm giving all the credit to him because it's great. I'm sure he learned it from someone too, or maybe he just figured it out. I don't know. Do people even generate new ideas anymore? Maybe. But anyway, let's talk about it. So let's break down how specifically this works. So the methodology really starts around bank accounts, and the method begins with the creation of 5 separate bank accounts, which is income, profit, owner's comp or owner's compensation, taxes, and operating expenses. And basically what he does throughout the book is he talks about this thing called revenue allocation or allocations, okay? And every time the business earns revenue, that money is first placed into an income account first. So it's talked about like, hey, this is the serving platter. Your income account is your serving platter. And then from there, you have portions that go into other accounts, right? Which is going to be your profit, owner's comp, taxes, and operating expense accounts, okay? Now, those portions of that revenue are moved into those 4 other accounts in accordance to predetermined percentage allocations, and they call these TAPs, target allocation percentages, TAPs for short, okay? And these allocation percentages, they're specific allocation percentages determined based on the size of the business and the real revenue of the business, right? So it's not based on, it's the specific allocation percentages are determined by the size of the business. There we go. I don't know why that was so difficult to say, but it's based on the size of the business and the business's real revenue. And at the end of the day, like this isn't including like any of your like 1099 employees or anything like that. So to go like really in depth on it, go read the book. It'll probably be way more helpful than me just explaining it over a podcast and you listening. But here's the general guidelines, okay, proposed inside of this book. So say you're doing a business that has roughly $250K in revenue per year. What they say to allocate is roughly about 5% to profit first, okay? So from your total revenue, you're going to allocate 5% to your profit first account. From there, you're going to pay yourself second. On a business this size, chances are you're not going to have any employees, so you're going to need a decent amount of this revenue for your personal income. So about 50% of your total allocation is going to go to owner's compensation. Okay, so 5% to profit, 50% to owner's compensation, 15% to taxes, so this is top line revenue going towards taxes, and then about 30%, 30% for operating expenses, okay? And then as that business scales, those allocation percentages do shift, right? Team, real quick, if you're on ClickUp, you're going to want to download this client management template pack, especially if you run an agency. I'm going to leave it in the show notes for you. It's 100% free. Go click the link and download the template pack. And so say you were doing a business that was doing 500K per year, right? You would allocate a little bit more to profit, okay? Start to build some of that war chest up a little bit. So from that 10%, from that profit account, you'd have about 10% being allocated there. So going from 5% at 250K to 10%. And then owner's compensation would drop to about 35% because as you're making more revenue, you just don't need to pay yourself as much. About 15% to taxes still. And then we're going to start stacking more into operating expenses because as your business grows, you're probably going to have to bring on employees and those types of things. Okay, so it does shift as you grow, and these percentages will differ for larger businesses. But inside of Profit First, they kind of advise that the business gradually increases their profit. Start practicing taking profit because most people pay their operating expenses first. They pay themselves second. And then, they probably don't even think about putting money aside for taxes. Like, to be honest, like most people don't do that. And then whatever is left over is profit. So they kind of flip the model upside down. It's like, hey, we're going to take profit first. We're going to pay ourselves seconds. We're going to pay the government third. And then from there, whatever's left over is operating expenses. Okay. Now, the regular transfers, what they recommend inside the book, is the 10th and the 25th. I do it slightly different. I do ours go out on the 15th and the 30th of every month. So those allocations are made on the 15th and 30th. And the transfers are made from that income account, that serving platter, into the other accounts according to those allocation percentages. And it happens kind of like clockwork, right? Like it happens very consistently. It should go out on the same time every month. So if you do it on the 10th and the 25th, that's totally fine. If you want to do it on the 30th and the 15th, like we do, that's totally fine as well. But at the end of the day, you should have regular transfers at least twice a month. And then from there, profit distributions, okay? Every quarter, a profit distribution is taken from that profit account. Roughly should be like 50% of the total balance of the account. This money is rewarded for the business owner and should not be reinvested back into the business. So that profit account, you can take about 50% of that in more profit distribution because that's your money, right? That's your profit, okay? And you can allocate that wherever you see, please. Sometimes we just keep it in there and we build up, like for us, like we build up a war chest of like 6 months before we take any extra distribution. So if we don't have 6 months cash flow available, we're going to work on getting 6 months operating expenses before we pay ourselves any extra on the distribution front. So a little different strategy. We do it slightly different, but it's just that safety net, right? Want to be able to pay our team for 6 months. If we collect zero, like if we collect $0, like we know we're fine for 6 months. That's a really good place to be, and it's going to make you think a lot more clearly. You're not going to have kind of like the scarcity mindset of like where are we going to get money from this month, right? You know you're going to be fine, even if you brought in zero, which is such a worst case scenario. You know you're going to be fine in the meantime. Okay, and then the last little point here that I want to make, and then we jump off. This is kind of a long one today. But expenses management, the aim is to run your business based on what is remaining, right? So you pay out everything that is kind of like important to you, right? So your profit account, your owner's comp, you got to pay your taxes, right? Like you can't get past that. Whatever's left over is meant for operating expenses. And if there's not enough money to cover expenses, it means that the business is trying to live beyond its means. And the strategy kind of makes us and forces us to find ways to cut costs, become more efficient, right? And here's the thing is like, I don't want you guys like going like cutting all your costs, right? Like you probably need some of those things to live and survive. But the idea is that that we pay ourselves, we pay the profit account in ourselves first before we pay our operating expenses. That's the healthy way to run a business. And it's important to remember that, this book in Profit First is a simplified approach to financial management, but if you're getting into financial management for the first time, it's a really good place to start. And here's the thing is like, it might not suit every business. It might not suit you completely and where you're currently at. But think of it as like a broad financial strategy for yourself. Okay. And you should actually advise with a financial advisor before pulling the trigger on any of this. I'm not a financial advisor. This was not what you should go and do. This was not advice for you guys. This is what I'm currently doing. This is how our company is run. Don't go do this, okay? Don't listen to me. turn off this podcast. Stop listening. Seriously. Okay. No, just kidding. But seriously, not advice on that side. Go talk to your financial advisor, your accountants. Make sure that this is a financial strategy that will actually work for you. It's worked for us. Yeah, and that's all I got to say about it. Love you guys. We'll see you in the next one. Peace. Yo, thank you so much for listening in to Daily Ops Boost. We really appreciate your attention. If you're enjoying the shorter form content, you're going to absolutely love the long form content that we post over on YouTube. We do a live stream every single week, 7 p.m. Central Time. Go check it out. It's on YouTube. It's called Agency Therapy. We'll see you over there.